Welcome to the channel. I'm Darren Farwell of the Farwell Group with Scotia Wealth Management. And this series was created to help you find financial freedom. In each video, we discuss topics, strategies, and concepts relevant to you in your life. Be sure to subscribe to our channel and click the bell below to receive notifications of new videos. Today, I'm going to talk about small business loans. I'll touch on some important factors to consider, whether they're the right thing for you and your business or not, some things to think about when you're considering, and then I'll take a few Q&As. So a small business loan is generally something you're going to get as a business owner who's looking to grow your business. Really, it all depends on the very specific circumstances of you and your company. There are two types of small business loans. One type of small business loan is called an operating business loan. It's really based on your receivables. At the end of the period, 30, 60, or 90 days, you have to pay that back, and then you start it all over again. Another type of small business loan is called the term loan. This is the kind of loan that we're more familiar with in the sense that it's amortized. You have an amount of time to pay it back. These loans tend to be based on things like equipment, real hard assets that they lend against. A couple of things to keep in mind about a small business loan. Number one, they're expensive. Prime rate plus 2%, plus 3%. Prime rate plus 5%. So you're going to need to be sure that your net of all your expenses is growing at a rate fast enough to make that kind of borrowing cost make sense. Like all borrowing, if you borrow, you want to be very sure that you can pay it back, because there are long-term consequences for you personally, potentially, because often these require personal guarantees, but also for your business. Now, there is a kind of lending that isn't as well known. It's called the Canadian Small Business Financing Act. This is a government program, and small business owners can have access to 80% of the loan, but the operator has to guarantee 20% themselves personally. That's available for up to $350,000. So get a business loan as soon as you can, as soon as it makes sense, as soon as you can be sure that you can pay it off, because capital is what helps grow businesses over the long term. I mentioned that some of the banks do actually provide some level of support and financing for those companies that are less than 2 years startups. I know, for example, the Bank of Nova Scotia definitely does. A number of my clients have actually accessed the financing available through the bank's program called a Running Start for Businesses. It provides up to $25,000 for startup companies to help them get going. I often get asked whether or not you can use the money that you got from your small business loan, for other purposes, like buying real estate. And in fact, you can use money that you obtain through your small business loan to buy real estate. You can't use that money to buy, for example, a personal vacation property in your own name. Any real estate purchased using money from a small business loan has to be purchased in the name of that business. Very much like real estate, once you have your small business loan, you can use that money to purchase a portfolio of stocks. That portfolio of stocks will be kept as collateral, but you can use that money to buy a portfolio of stocks as long as that portfolio of stocks is owned in the name of the company. For more information on small business loans, be sure to check out the resources we've included below. Finding financial freedom doesn't have to be scary or an overwhelming goal. In fact, it may be closer to reality than you ever imagined. Tune in next time as we share more tips and concepts. Don't forget to subscribe and click the bell below for notification for future episodes. If you'd like to get in touch, please don't be afraid to email us at the address below in the description. Bye for now.